Hey guys, welcome back to 90 Seconds with Chris. In today's video, we're going to talk about the federal fund rate, also known as the Fed rate. This is simply the overnight interest amount banks charge one another to lend and borrow money. Traditional banks typically make money by taking in deposits from individuals like you and me. They then go on to make loans based on these deposits to individuals and financial institutions and charge them fees and interest. Obviously, banks can't lend out all their deposit. They have to keep some cash on hand to service customers' immediate needs. They also are required by law to keep some cash, about a percentage of their deposit, in the central bank's Federal Reserve, say for this example about 10%. So the central bank is simply a bank for other banks, and the Federal Reserve consists of cash deposited by other banks into the central bank. Whenever a bank's deposit in the central bank falls below this 10%, they obviously need to bring it back to the quota as is required by law. This means they have to borrow money from other banks just to bring it back up, and this creates the federal funds rate, which is just the interest rate a bank borrows from another bank to bring it back up to the 10% set by the federal government. The Fed can manipulate these interest rates based on open market operations. Open market operations is a system where the Fed aims to increase the money in circulation by purchasing assets like securities and debt on the open market. Quantitative easing is a type of open market operations, but for long-term securities. This is a controversial policy, like I said, but the increased money in circulation reduces the effective federal fund rate, and every other interest rate like mortgage interest, car loan interest, they all follow the federal fund rate. Keep in mind that the federal fund rate is just a target number and not actually enforced. Banks can negotiate with each other and decide on what interest rate they want to negotiate, but it's usually around the federal fund rate, the target number. That's it for the video, guys. I'm gonna see you guys in the next one.